what we're watching here is predominantly oil pricing as well, because it's got big implications for stability within the region. So very much a wait and see financial markets approach at the moment, but obviously big news.
Energy was one of today's stronger performing sectors. The US president did make some comments overnight about driving Iran's oil exports down to zero. Can you forecast what you expect in this sector in the weeks, months ahead, or is it just too difficult?
Energy is one of the toughest sectors to forecast. Obviously, you've got Iranian sanctions, Russian sanctions, but oil still moves around the place. So for us, what we know for certain, though, is he's very much focused on Iran this time, and he was last time as well. So we expect more pressure on Iran, and ultimately that's going to lead to some disruption in supply chains. So we think oil probably looks okay from an economic growth point of view. It's a harder case there, but I think on the supply side, it looks quite tight, and this tension obviously is going to cause some stability issues, and we think it's going to put upward pressure on price here.
We saw a huge sell-off after President Trump's initial tariffs announcement concerning Canada, Mexico and China. But there wasn't such a big reaction to China's countermeasures, which were announced yesterday. Why not?
The countermeasures China put in place has been categorised as it was a pinch, not a punch. It's very mild reaction from China. So very measured. We expect phone calls this week, and with Trump it will be an amazing phone call, and then we'll get some sort of resolution. But obviously it's not going to be as positive as the Canadian and Mexican resolution, because there's a bigger issue here with the two largest economies battling out. So we think that China will be much extended on the tariff front, but ultimately Trump is a deal maker. We think a deal gets done, but don't expect an early resolution like the Canada and Mexican tariffs.
If Donald Trump is weaponising tariffs as a negotiating tactic, are we less likely to see investors making big market moves on the basis of what Donald Trump says and instead wait to see the substance of what he does?
Yeah, I think you're correct there, where the tariff announcements previously would cause many days of pain. The duration of pain is much shorter this time around. So I think the market has learned from the previous term. But it's still very much in the back of the mind. Tariffs, what that does is cause uncertainty, and uncertainty will show up in data at a period. So we're still watching that very eagerly, but the big shock announcements, the market is very much taken in its stride. And I think the key here is around Scott Bessent. He's the moderate within the party at the moment, and for me, he is key. If we see Scott Bessent leave the party or quit, all bets are off, and I think you'll see much more volatility come back in, because when Scott Bessent came in, the bond market was very soothed by him coming in because he's a moderate. So I think he's a big check on Trump at the moment, so we're just watching that very closely.
Given what we've already seen from Donald Trump's return to office, what do investors need to know and be prepared for?
I think investors need some clarity on the tariff resolution. I think most of his policies we can agree upon are fairly good for financial markets. So deregulation in the banking sector, tax cuts are great. Uncertainty is not great, and volatility is not good for markets. So we need some clarity on how far he's willing to go, and the settlement with China will be key for us. I think that will be key. Obviously it's going to go after the EU, but again, we think that will be short-lived. So for us, it's really the settlement with China, and if they can stoke up the first trade pact which they were agreed upon, if they can put that back on the table and agree upon, we think markets will digest and get some clarity over the next 12 months.
We are only a couple of weeks or a few weeks into the second Trump administration, but are you having flashbacks to conditions that you had to deal with and adapt to from the first administration?
Yeah, bringing back very vivid memories of the first administration. Obviously, we're a little bit more used to the noise, but again, it's really a headline-driven market at the moment. So you've got to have your wits about you, because headlines will drive short-term price reactions. But again, as we talked about, if you look through the longer picture, where are we going to? What are we trying to achieve here? I think investors should look through all this noise and not react to the headlines.
Matthew Haupt, thank you for your insights.
Thank you.